Well, folks, I hope you flip some flapjacks out there today. A lot, and I mean a lot of money to be made out there here today. Public count up over $61,000. Very important video here today. We're going to talk about what this means for the year end. Is this rally going to continue on or not? I'm also going to explain to you what is likely to transpire in the stock market in 2024. And what are the chances that certain scenarios play out, okay? And we're going to talk about positioning, many other various things in this video. So action-packed video. That's why I'm sitting down for this one. I appreciate y'all joining me as always. Thanks so much for being here. Thank you for being subscribed. And I really just want to get straight into this one because there's a lot to get through here today in this one, okay? Now, first place I actually want to start with this video is what a recovery for the public count this year. And this is with minimal buying. Like I buy $250 every Friday. And without having to do any really huge buys this year, the accounts just had a tremendous year. But the results of this were really put in last year, right? Because last year I had to make a lot of very tough decisions to cut some stocks that weren't the right ones, that the business models just weren't headed in the right direction. I had to cut them, right? I had to make some other hard decisions about buying some stocks that no one wanted to own at that particular time. And I had to stick my head out there and buy those stocks when they just kept going down and down and down and down. And stocks like Meta, stocks like Palantir, for example, right? That couldn't catch a break. And I put in a lot of hard work last year. And now it is starting to pay, obviously, massive dividends this year with the recovery. I mean, we're at like $1 million roughly in this account to start the year. And now, I mean, if this market keeps going risk on, we're going to push 2 mil by the end of the year, which would be a pretty extraordinary comeback here. And there's a lot of stocks that have performed horrible this year. So it's not like I, could have, it's like there's no brainer. Like I could have only done good. Like I could have done really bad this year. If I would have stayed positioned in certain stocks and not have bought the dip on other stocks, like this could have been an ugly year, folks. And so, yeah, a lot of hard work and just putting in a lot of hard work this year. So regardless of what happens next year, market tanks, market's flat, market skyrockets, it doesn't matter. Any way you slice it, I'm going to be looking really good next year as well. But, it's just a lot of work. It's a lot of focus to try to get your account and portfolio into a place that you're going to succeed overall. Okay. Now, what happened today is a huge deal. And I mean an absolutely massive, epic deal. And why is this so huge? The reason being is the Russell so significantly outperformed the other indexes here today. The Dow Jones Industrial Average was up 1.4%. The NASDAQ was up 2.3%. The S&P 500 up 1.9%. And then the Russell Wilson was up over 5 percentage points here today. And the reason this is such an insanely massive deal is a lot of people that are hiding out money, and there's so much money in treasuries right now, it's not even funny, folks, okay? There's so much money hiding out and people making money on the short-term treasuries getting 4 or 5%. And these people have said, I'm not stepping back in this market until we see real breadth in the market and we see things like the Russell and small cap stocks actually start to perform well. When those ones start to perform well, then wake me up, then I can get interested in the market. And so a day like today is just a little jolt to the crazy trillions of dollars on the sideline that is looking and they're like, oh, okay. Now, those folks aren't going to all be sold today, right? They're not going to all be like, oh, okay, one huge day for the Russell, it's risk on for now on. But the more you see the Russell outperform the other indexes, the more and more these folks that have crazy money on treasuries are going to say, damn, maybe I need to get back in this market. Once you see the Russell hit a new high, that's a whole other level of starts to breed like FOMO out there, right? Which we're still a long way from that. But the more days and weeks and months you can see the Russell outperform these other indexes, more and more of these folks with the sideline money say, damn, man, I got to get back in this market. I've been out for too long. And a lot of these folks left the market last year. And now they're looking and they're saying, man, I mean, imagine you leave the market last year and you watch many of the most popular stocks go up 50, 100, 200% this year. I mean, my gosh, right? Now, I also saw a few things that were very interesting here today. One is there's certain stocks that were really underperforming today. Like Meta, for example, right? Meta was only up 2.1%. They didn't even perform as well as the NASDAQ here today, right? And I was up $12,900 on Meta. So, it's still awesome for a daily gain. But if you're underperforming the NASDAQ, it's not necessarily the greatest thing. But I will say Meta has had such an insane performance that sometimes you're going to get these like downer days. This stock has so significantly outperformed the NASDAQ, the S&P 500, the Dow Jones Industrial Average, or the Russell this year. It's like a whole other, area, kind of like Palantir, which Palantir was incredibly weak here today. Palantir was only up 1.1%. Are you flipping my flapjacks? Palantir, what happened? Here's the deal, okay? Palantir stock is up over 200% this year. Over 200% this year, okay? So sometimes these stocks are going to have what's called a mad day, and it is what it is, okay? But the bottom line is, it was surprising to see, because if you told me the Russell was going to be up 5% plus, and that's the only data you gave me, and you said, okay, Jeremy, Russell's up over 5% today, how much is Palantir stock up? I would say probably 8 to 11%. 8 to 11 percentage points I would figure Palantir would be up if the Russell was up 5% plus, and that was the only data you gave me. And to see it up 1% was a little disappointing. Now, Tesla stock had a booming day here today, up over 6 percentage points. We were up over $22,000 on the Tesla shares here today in the public account, right? And so that leads us to this conversation, which we need to address, which is it clear skies for Tesla now at this point in time? Stock's pushing 237. If we keep getting risk on, or do we push 250? Something like that. Is it clear skies for Tesla ahead? I will say this. I'll say absolutely not. Absolutely not is it clear skies ahead, okay? Just because the Russell goes risk on, we have what happened in CPI, and we'll talk about that in just a moment. That does not mean it's clear skies for Tesla in the short term, okay? At the end of the day, autos are still in a weaker place, or still going to be in a weaker place for the next 6 to 12 months. Interest rates are still in a weaker place, okay? And I would not say it's blue skies ahead, okay? We still got probably another couple quarters here of rougher numbers. Cybertruck ramp's going to be very exciting on the revenue side, but it's not going to be exciting on the margin side or the profitability side for those first few quarters of ramp here. That's going to be definitely something that weighs on Tesla. And we have some excitement about the November 30th event, but we've seen it before where Tesla will get excited in those events, and then right after the event, it sells off big. So I will say it's not clear skies for Tesla. I obviously extremely bullish on Tesla for the long term, but I'm not bullish on Tesla necessarily for the next 6 to 12 months. You get these sorts of rallies, and then next thing you know, all of a sudden Tesla's selling off, and next thing you know, it's under 200, and everybody's, it's the end of the world, and it's, oh my gosh, Tesla's one of those sorts of stocks, very volatile, okay, very volatile. Now, if you watched yesterday's video, I told you guys specifically in yesterday's video, Wall Street doesn't want people saying, these stocks like the Revolves and the Nordstroms and all these sorts of clothing-related companies are going to do bad next year based upon the pricing action and based upon the commentary. And I'm here to say these stocks are bangers for 2024. I'm looking at these stocks, and I think they are so well positioned for 2024. We're talking about easy comps. We're talking about small spend is still going to be there in a massive way, and actually in a much better way in 2024 versus 2023, based upon inflation continuing to come down and real wages continue to pick up. And big ticket purchase items still going to be weak in 2024. So people are going to spend on small ticket purchases. And that's going to be things like clothing. That's going to be things like restaurants, services. And so I think that's going to be where a lot of the biggest winner chicken dinners are going to be at actually in 2024. I love Revolve. And clearly, you look at the performance on a day like today, stock was up nearly 8 percentage points here today in regards to Revolve, right? PayPal even had a good day. PayPal was up over 4% here today, right? Now, I am still worried. I'm very worried still, short term, about PayPal in regards to tax loss harvesting. Here's the deal, okay? No, there's been a lot of stocks that a lot of people have made a lot of money in this year. NVIDIA, AMD, Meta, even stocks like Microsoft, Apple, right? I mean, there's a lot of stocks people have made a lot of money in. PayPal's not one of those stocks, okay? Almost everybody that's been in PayPal for the last few months, last few years, are all down on PayPal, okay? So if you've taken big profits in a Meta, in an Amazon, in a Tesla, whatever, okay, there's a decent probability you might be a holder of PayPal. And you might look out there and say, I can tax loss harvest this baby. I'll buy it back in maybe February, maybe March, something like that, and go ahead and write off against those gains over there, right? And I think that's what there's still going to be a good amount of people that likely do that in December. So I'm not bullish on fintech or PayPal in the short term, meaning the next month, but I am very bullish on those stocks in 2024 in general. I think a lot of those stocks are going to have boom times, and I think all those stocks have already hit their lows. That's my personal opinion in regards to that. PayPal, Square, all of them, I think have already hit their lows at this point in time, and I think it's only up from here, but there could be pullbacks here and there in the very short term. But you know what I do think about? I do think about the moves that happened last year. With, for instance, like Meta, right? Meta last year, there was no real tax loss harvest in that baby. That hit those lows at $88 in early November. And then from there, by the end of the year, it was like 125 plus, right? So I do think like, well, a lot of those stocks that got hammered last year, people didn't really tax loss harvest on them. But the other thing I think about is probably a lot of people didn't have gains last year. That's the difference, right? That's the difference. A lot of people didn't have gains. This year, a lot of people have gains, probably took a lot of gains, right? And so they need something to tax loss harvest against. And I think that's why dividend stocks could actually see still weakness into the year end. And I think stocks like PayPal, I'm not necessarily bullish on them to go beast right now. I'm more bullish on them for 2024 and beyond, just to be quite honest, okay? ELF on a shelf, massive day here today. Up over 9 percentage points. I think everybody's blown off that whole short report. I read through that thing. I was like, what am I reading? Like, what the crap is this crap, okay? And I think that freaked a little people out for a little bit there. I wouldn't be surprised if ELF is 120 to 140 by year end. I don't care if it is or not, but I wouldn't be surprised. Like, if you told me ELF's in the 120 to 140 range by the year end, I wouldn't be surprised at all. The numbers are insane they're putting up. They're going to continue to be insane they're putting up. And, it's actually a cheap stock. That's the craziest thing. It's actually cheap. Based upon the growth rates this company's growing at, it's actually a cheap stock overall, okay? Fubo, look at Fubo. 15% plus up here today. 15 percentage points up. Fubo is basically I look at Fubo as like a call option on the Russell 2000. It's kind of the way it acts, right? Because if you were to tell me, the Russell's going to be down big, I'm going to say Fubo's probably going to be down more. If you tell me the Russell's up huge, I'm going to say Fubo's probably up more, right? And look at, you got the Russell up 5% today, you got Fubo up 15%. It's basically a 3x, right? If we have a risk on time for the Russell for the next 6 to 12 months, stocks like Fubo are going to be out of control. I mean, just out of freaking control in regards to this one. Now, it was interesting on the live stream here today. Shaheen, who was on there, and he's a Fubo bull, and he was saying congrats to Fubo shareholders. And I said, I understand it was a good day for Fubo, but I don't really care. If Fubo is $2, $3, $4, I don't freaking care. Okay, I'm in this stock because I think it's going to be a $10, $15, $20, $25 stock in the future. And so all these like little short-term moves in Fubo, I don't even care. I don't even want the congrats. I don't want any of that. I want the big money in regards to this one. I'm not messing around with this stock, with taking the risk I'm taking in this stock. Even though it's a smaller position, I'm not still going to take that risk unless there's crazy big upside on the other side. I don't want the 100% upside. I want the 1,000% upside. That's the way I look at a stock like Fubo. If I'm going to take a smaller amount of money risk in this one, it's got to have ridiculous upside on the other side. And so if Fubo's $10, $15, $20, congratulate me, okay? But not yet. Not yet. I need to see that business model continue to come around in those sorts of things, right? Now, in yesterday's video, I told you guys what about the Russell? I said the Russell right now is trading incredibly cheap. There's only 2 other time periods in my lifetime, not my investing lifetime, I'm talking about my lifetime period, that I can look back at those time ranges and find the Russell trading lower on a 3+ year basis. In one time was a great financial crisis, another time period was a tech bubble, and another time is right now. And so at the end of the day, small caps are an incredible opportunity in this market. They're a steal deal. I mean, an absolutely steal deal and incredible value. For anybody that's got a longer term horizon, it's a steal deal. And the only thing I can find that's really a better steal deal out there right now is my Black Friday sale that's coming up. On the Patreon tier, usually $125 tier, we're doing it for $62. It's like, are you kidding me? What is that, 0.1% of what I made today in the market? Like, come on, man. The steal deal of the century. You get my #1 course ever, Become a Master Stock Market, $997 value. Ability to see the moves I'm making out there in the Patreon portfolio each week, plus see exactly how I diversify. It's 9 days away, folks. 9 days away. The 1-day sale. Enter in your info, pin comment down there. We'll send it over. It's a 1-day sale. Get it while it's hot, or don't get it at all. And then you'll be wishing you got it. Alrighty, folks. Next up here, CPI. So numbers came in good. 3.2%, 3.3 was expected. So that's good. Okay, everything's moving in the right direction as far as inflation goes. We're looking like we're setting up for 2s in 2024, which is a huge moment for the market, because when we talk about 2s, then we can talk about the Fed's like officially done. Right? The Fed needs to see CPIs in the 2s to feel done. And so once we get a few months of 2s, we're good, right? And the market's already kind of pricing in some of this going in, so that is something to kind of keep in mind, right? Now, if you watch a lot of my videos, you know my stance on inflation in 2024, right? And my stance on inflation for 2024 is there's going to be no problematic inflation in 2024. Everything that we look at for the data points are not pointing to be good for inflation for 2024 in terms of like if you're thinking inflation is going to be high. Home prices, good luck, trying to sell homes still for the next 6 to 12 months and doing it for higher prices. You've got to be extremely aggressive on home prices, and you're going to have to continue to be in the short term. Rents. I'm a landlord. I own a couple of real estate investment properties. I can tell you it's not a great time for rents out there. And I don't see it being a good time for rents anytime soon. I think it's going to continue to be maybe even a worse time for rents over this next 6 to 12 months. When I look at the amount of inventory that's about to hit the rental market, the amount of apartments that are about to hit the rental market, I think rents are going to continue to be pressured for the next 6 to 12 months. Auto prices. Are auto prices going to go flying to the moon? Heck no. Okay? Not yet. Not in 2024. So auto prices aren't a worry. Furniture, no. Furniture companies need to be ultra aggressive right now because homes aren't moving, so furniture sales aren't there. So if anything, they need to cut price. If anything, they need to see deflation there in 2024. And commodities, GSG is down the past year. So none of the big components that would push up inflation are there. So ultimately, inflation is not going to be an issue in 2024. It's just not. 3 years from now could be a different story. 5 years from now, 10 years from now, 100 years from now could be a whole different story. But for 2024, inflation is not there. We should be twos, okay? Now, if you know my 4 scenarios for 2024, these are the 4 scenarios I see playing out in 2024, potentially, okay? And I'm about to, for the first time ever, take you through the percentages I think each scenario is going to happen, because it's not 25, 25, 25, 25, I can tell you that. Some of these scenarios I have as much higher probabilities that they're going to happen versus others. I'm going to take you through those numbers in just a moment. Scenario 1 is where earnings go down, recession hits, job losses hit, revenues of companies go down, Fed starts cutting rates in a big way in the back half of 2024. That's a similar scenario to like an 08, 09 type scenario. Okay, big recession, gets violent, Fed has to start cutting. Scenario number 2 is where the economy weakens, but we don't have a recession, jobs hold up, but inflation's in the 3s and 4s all year. And so the Fed has to keep rates here or maybe even potentially go a little higher than where they're at, okay? Scenario number 3 is where the economy gets stronger, unemployment stays in the 3s, real wages boom, housing bottoms in the wintertime, home prices climb in the second half of 2024, the economy starts being seen as too hot in the second half of 2024, and the Fed has to start raising rates even higher, to much higher numbers, okay? Scenario number 3 is where the economy holds good, unemployment is in the 3% range for the year. Real wages recover big. Housing and autos bottom in the first quarter. CPI's in the 2s and 3s the entire year, probably closer to the 2s the entire year. The Fed lowers a bit here and there, maybe. Smooth sailing into the Q4 2024 election. The market booms in 2024 and recession crowd throws in the towel. Okay. Now, the percentages I have in each of those is as follows. Scenario number 1, the pretty doomish day scenario, I have actually had about a 35% scenario. So I think there's a pretty high probability of that transpiring. Scenario number 2, where inflation's in the 3s and 4s all year, I don't see that being very probable. So it's a possibility, but not very probable. I had that at a 10% probability. You know, I live in Vegas. We put odds on everything, okay? Scenario number 3, where the Fed has to keep raising rates higher and higher in 2024, I only put that as a 10% probability as well. Very low probability. Scenario number 4 is the most probable scenario I see playing out for 2024. That's a 45% probability here. And so if you notice, what I'm actually thinking is going to happen, and by the way, I'll be able to make money from any of these 4 scenarios playing out, okay? I'll make more money from these 2 scenarios, but these are the most probable scenarios I actually see playing out, right? 80% of my odds is on scenario 1 and scenario 4, right? Which is very bad, rough, and then we could call it a very good kind of ideal situation. So that's my odds there, right? Now, in the short term, I do wonder how much Wall Street really needs this market to go higher, right? We know Wall Street is desperate for a Santa Claus rally, so we knew we were going to get some sort of Santa Claus rally here, right? But it's already ripped so high. The Nasdaq's up about 10 percentage points just so far this month. And I do wonder, how much does Wall Street really need more, right? And so I almost wonder, is the market going to really continue strong in December or not, right? It is something I'm thinking about. But I do also consider, damn, a lot of these Wall Streeters went into this year way underinvested, and maybe they do need to climb a lot more here, okay? So that's just something I'm considering. Now, I was looking at my housing stocks watch list the other day, laughing. The moves were parabolic, like on a whole different level on that list. 18% Redfin was up today. Enphase was up over 16 percentage points. Rocket up over 15 percentage points. Zillow's 12%. These REIT-type plays are up 10, 11% today. I'm like, what are we talking about here, folks? What are you talking about here, okay? The 30-year fell today. Woohoo! 7.4%. We've gotten the entire population used to 3 to 5% mortgage rates for the last several decades. 7.4%, let's be quite clear, is still astronomically high based upon any time period in the last couple decades, okay? So if they think magically mortgage rates go to 7.4% and everybody's going to go out there and buy a home and the real estate market's going to be great, I'm just like, what are we talking about? That's just not reality. It's not reality. We need treasuries to fall dramatically more. If you want to talk about the housing market restarted, we need 30 years at 5s. Okay? And so 7.4 is just not realistic at all right now to say, boom times. No. The other thing I think is interesting is Russell was up over 5 percentage points here today, which is crazy big move, like one of the bigger moves you'll ever probably see from the Russell. But we're not even in a strong seasonal time period for the Russell. This is very intriguing. A friend sent me this over a few hours ago, okay? The Russell, this goes all the way back to 1979, okay? A decade before I was born. I was born in 89. And what you're going to find is the seasonally super strong time for the Russell index is actually mid-December through about mid-March. That's a really strong time period. And so we're not even in that time period right now, right? So it's just a little more food for thought out there. Now, I saw Dan Niles here today come out and speak and, send us some tweets and stuff like out there. And we don't always see eye to eye, but we do see eye to eye on this, okay? He thinks Amazon and Meta are the best position stocks kind of moving forward, and I'm in 100% agreement with him. Absolutely. I think, Tesla, I think still has a lot of questions, although that is my second biggest position in the public count. I still think it has a lot of questions over the next 6 to 12 months. I think Apple has a lot of questions over this next 6 to 12 months. I think Microsoft is getting into like FOMO range. And I think NVIDIA, if NVIDIA comes through with great numbers, but they're not that great in terms of the guidance, that stock could actually fall on earnings, believe it or not. Even if they beat on the guidance, everybody's gotten so used to crazy beats for NVIDIA, it needs to be like ridiculous to get people excited there. So I agree, like Meta and Amazon are the best position in the big caps, right? I saw this today. Michael Burry has closed out his short position and supposedly lost like 40% on that, right? I like the kind of kind of fact checking stuff and whatnot, right? But I'll be honest with you guys. I've heard Michael Burry speak a couple times in the last few months, okay? And here's what I can tell you about where Michael Burry's at. Michael Burry, he doesn't even sound bearish. I've listened to him, man, a couple times in the last few months. He doesn't even sound bearish to me. And the folks on CNBC and whatnot, they try to, push him to see if they can get some bearish points out of him. Dude doesn't sound bearish at all. I'll just be honest with you guys. He does not sound bearish at all. And, everybody tries to push him to the bearish side all the time because of obviously his history and the great financial crisis and all that. But he just doesn't sound bearish, okay? And so, I don't know. I thought that was intriguing that a man like that usually is going to look at things from the negative angle is looking out there, and he's not even very bearish right now. Something to keep in mind. Now, have you noticed this? Have you noticed? No one's talking about the government shutdown anymore. What happened to that? We just don't talk about it anymore? No talk of government shutdown? Like, think about this for a moment, right? It was just a few weeks ago, everybody was talking about government shutdown. They were talking about the Middle East. They're talking about Russia, Ukraine. They're talking about recession fears. Talking about China stuff. They're talking about oil to 150. This was just a few weeks ago. And now all of a sudden, no one talks about it. Isn't that funny how that works? It's funny. It's almost like when Wall Street needs the market to go up, suddenly all these things go away. Even though they never went away, all this is still going on. And when Wall Street needs the market to go down, suddenly these are pushed to the front. Everybody talks about them. Isn't it funny how that works, right? I'll put it to you like this. I created this, okay? This is called the new retail trader investor life cycle, okay? Here's the deal. Wall Street caused a bunch of volatility in the market. Stuff starts shaking. The market starts going all over the place. People start looking and saying, what the heck's going on? Media starts looking, what's going on here? Why is the market going down? Why is things getting so crazy? They have a bunch of reasons to blame it on, right? Everybody starts talking about those reasons. Then retail starts to get scared. They end up selling stocks. Some of them end up starting to short heavy, right? That's something we saw play out at the end of last year into the beginning of this year. Retail got wrecked on the long side last year, so a lot of them started saying, okay, I'm going to make my money back by shorting because those are the guys that make money. And then those, by the way, those retail folks have left the market forever. They're never coming back. They're convinced 100% the stock market's a scam. They're like, they got screwed on the long side and the short side. Those people they left forever, okay? So retail ends up selling, getting out of their portfolios, right? Selling at really bad prices. Then right after that, guess what happened last month, right? Retail sells the heaviest they sold in years, 16 billion plus. And guess what happens right after? Stocks go flying to the moon. Wall Street comes in, scoops up shares, scoops them up, right? Then suddenly, no one talking about whatever the thing was over here everybody was talking about. Suddenly it just vanished. It's like, whoa, what happened to that thing? No one talks about it anymore, right? Then market does well, everything's calm. Retail says, you know what, everything seems pretty good. I'm bullish. I'm going to go ahead and get back in the market. And so they buy, and then the same cycle happens again. And it's a cycle that goes on and on and on again and again and again, okay? Don't get caught up into that cycle, right? Don't get caught up into that freaking cycle. Because too many people get caught up in that cycle, right? At the end of the day, this is a NASDAQ in my investing lifetime. I've been in the market since, kind of the end of '08. I got rolling in this game. You know how much BS I've heard over the years? You know how much serious stuff I've had to deal with in the market the last 15 years and other BS stuff I've had to deal with? It's ridiculous. It's off the charts. It's off the freaking charts, okay? At the end of the day, what did it all amount to? Buy the dip. Buy the dip. Buy the dip. That's all it amounted to. I mean, the Rona crash, a lot of people sold in that. A lot of retail sold. I know people personally that sold completely during the Rona crash, right? And still have never returned to the market. I understand they sold. They were talking about business was going to be closed for 3 years, bankruptcies, and everybody's going to go bankrupt. I held through, and I bought a lot of stocks in 2020. I can understand people sold in 2018. They were scared, trade wars and tariffs, and the Fed was starting to raise rates at the end of 2018. I was buying like crazy, but I understand people sold, right? I understand people sold right here. There was a lot of worries about, well, it's been a really good economy. We're about to have a recession. Recessions happen every 7 years or so. Last recession was 2009. We're due for one in 2016. A lot of people got freaked out, right, thinking we're going to go recessionary. China worries, blah, blah, blah. And ultimately, it was another buy the dip opportunity. And there's been a million minor and major things that happened over the last 15 years. And all it ended up amounting to was buy the dip, buy the dip, build your portfolio bigger, stronger, add positions. If they want to give you positions for huge discounts, take advantage of those opportunities. Be thankful you got those opportunities. Be thankful. That's all. When I see a massive drop in the market, I'm thankful. 2022, thank you for sending me that. Thank you for sending me that drop. That allowed me to position properly in the market. Thank you for that. Thank you for the 2020 drop. Thank you for the 2018 drop. Thank you for future drops. That's all you got to be. Thankful. Take advantage of the deals, folks. The whole game's rigged for the upside. I hope everybody realizes that. And the only people that get screwed are the people that think they're going to outsmart the system. And got to get in, got to get out. No, okay. That's not the way this game's played. This is the way you play this game. This is the way you freaking play this game. Add to great assets, build out great portfolios, and make flipping flapjack and money over time. And don't, people try too damn hard, okay? There's a difference between knowing how to understand income statements and PE ratios and balance sheets and know what to look for in companies and building out a portfolio versus trying to time things out perfectly and trying to have every stock be the next 10x. You don't need to play that game, folks. So much damn money to be made out here. If you position properly and know what you're doing in this market, make sure you take advantage, guys. Black Friday sale coming up, $62. That's a steal of the freaking century, okay? You get access to my Become a Master Stock Market course, my #1 course ever. You get access to see the positions I'm buying and selling my Patreon portfolio through Fidelity Investments, how I build a portfolio overall, how I construct it, how I run the game. That's nothing more valuable than that, folks, so you're going to get for a Black Friday deal. Check out pinned comment down there, enter in your info. It's a one-day sale. We will send it over to you when it drops, folks. Take advantage of deals out there. Much love and have a great day.